Hello and welcome. You're watching World Business Report here on News 9 Live. I am Krishna Kumar. We begin with Wall Street, which ended on a high note again, driven by ongoing speculation and anticipation surrounding potential rate cuts by the US Federal Reserve, and that is continuing to fuel investor enthusiasm on Wall Street, even as the US economy faces risks of a recession in the upcoming new year 2024. More details in this Reuters report.
Wall Street extended its rally on Tuesday as last week's dovish comments from the Federal Reserve continued to reverberate across markets. The Dow, S&P 500, and NASDAQ all added between 0.6 and 0.7%. Broad-based gains boosted all three indexes and nudged the S&P to within 1 percentage point of its all-time closing high reached in January of 2022. If the benchmark index closes above that level, it would confirm it has been in a bull market since bottoming in October of 2022. At the conclusion of its policy meeting last Wednesday, the Fed signaled that it had reached the end of its tightening cycle and opened the door to rate cuts in the coming year. But Sam Stovall, chief investment strategist at CFRA Research, says it may be premature for investors to start celebrating.
I think right now, both the Fed and the market are a little bit apart from one another, and they will have to come closer as the new year progresses. Right now, I think the Fed is saying that there's a possibility that there will be 3 rate cuts in 2024, probably starting in the second quarter, maybe even the middle of the year. But the market seems to be building in the prospect of 4 or more rate cuts in 2024, with the first one coming as early as the end of the first quarter. So I think the market might end up being a bit disappointed because the Fed keeps telling us that they are data dependent, so they'll probably end up being high for longer.
On the economic front, a report from the Commerce Department showed single-family home building surged 18% to a more than 1.5-year high in November. On Thursday, the Commerce Department is expected to release its third and final take on third-quarter GDP, followed Friday by its crucial personal consumption expenditures, or PCE report, the Fed's preferred means of gauging inflation. In company news, Boeing shares rose more than 1% after German airline Lufthansa revealed it ordered 40 737 MAX 8 jets from the plane maker. And shares of Kenvue gained more than 2% following a U.S. court ruling in favor of the consumer health company in a lawsuit over the company's drug Tylenol.
Now, amidst the festive season, doubts loom over the likelihood of a traditional quote-unquote Santa Claus rally for stocks, and that's prompted discussions on what exactly are the market trends getting into the new year and the potential factors influencing them. That's the word coming in from Sam Stovall, chief investment strategist at CFRA Research. Listen in.
There's often talk of a Santa Claus rally, and that rally period is the last 3 days of the old calendar year, first 2 days of the new calendar year. And whenever the market has been higher in that period, it is pointed to a higher return for the overall stock market and a greater frequency of advance in the coming calendar year. But as the Stock Traders Almanac reminds us, should Santa Claus fail to call, the bears may come to Broad and Wall. So with the market right now having been up 7+ weeks in a row, and also from a technical perspective showing definite signs of being overbought, the concern is that if we do end up digesting some of the recent gains during this very important Santa Claus rally period, we could find technicians who then tell us that that is more of an ominous signal than they would care to have read. But then also you have what's called the January barometer. As goes January, so goes the year. Whenever the market has been up in January since World War II, instead of rising 9% as it has done in every calendar year since World War II, the market was up nearly 16%. And instead of being higher 71% of the years, it was up 85% of the years. So the January barometer is a very strong indicator, along with the Santa Claus rally, to give investors an idea of how the year is likely to pan out.
We're keeping it with the U.S. The U.S. witnessed a substantial surge in single-family home building for the month of November 2023, and that indicates a promising trend in America's real estate sector, and that could have a positive effect on the broader economy.
In a positive sign for a U.S. housing market hammered by higher interest rates, data out Thursday from the Commerce Department showed a surge in home building last month. Single-family housing starts jumped 18% in November to a high not seen in more than a year and a half, and momentum could continue. Mild temperatures and dry weather likely helped construction, with home building soaring in the Northeast, Midwest, and the densely populated South. Another boost likely came from declining mortgage rates. The popular 30-year fixed mortgage averaged 6.95% last week, the lowest level since August. It has tumbled from a 23-year high of 7.79% in late October. At the same time, supplies of previously owned homes are tight, helping spur demand for new construction. Permits for future construction jumped to their highest level since May of 2022. The Federal Reserve held interest rates steady last week and signaled that the historic tightening of monetary policy over the last 2 years is nearing its end, with lower borrowing costs coming in 2024. Economists have raised their fourth quarter gross domestic product growth estimates, predicting that the housing market will help the economy avoid a recession next year.
Shifting focus away from the U.S., cryptocurrency exchange Binance and its disgraced former CEO Changpeng Zhao now faces a substantial financial setback, with the U.S. court imposing a hefty $2.7 billion fine. Take a look at this report.
Binance must pay billions of dollars in fines. That was the order from a US court on Monday against the crypto exchange and ex-CEO Changpeng Zhao. It approved the fines for money laundering following a case brought by the US Commodity Futures Trading Commission. Binance must give $2.7 billion to the CFTC, while Zhao is ordered to pay $150 million. He stepped down in November and pleaded guilty to breaking US anti-money laundering laws. It was part of a settlement to resolve a years-long investigation into the world's largest crypto exchange. At the time, Binance said the resolutions accepted the company's responsibility for historical criminal compliance violations. Authorities said Binance broke US anti-money laundering and sanctions laws. It also failed to report more than 100,000 suspicious transactions with organizations the US described as terrorist groups. Investigators added the exchange didn't report transactions with websites devoted to selling child sexual abuse material. And it was one of the largest recipients of ransomware proceeds.
Right, away from Binance to Google, which announced plans to reimburse a significant sum, totaling over $700 million to US Play Store users, signaling a resolution to an ongoing issue and drawing attention, more importantly, to consumer rights both in the US and across the world.
People in the US could be in line for a payout from Google over its App Store. The tech giant has agreed to pay $700 million to settle an antitrust case brought by states and consumers. Eligible users will get at least $2 each, and maybe more depending on how much they used the Play Store. Google was accused of overcharging consumers through unlawful restrictions on the distribution of apps on Android devices. It was also accused of imposing unnecessary fees on in-app transactions. The firm hasn't admitted any wrongdoing as part of the settlement. Utah and other states first announced the deal in September, but the terms were kept secret pending the outcome of a related suit brought by the maker of the Fortnite video game. A California jury last week ruled against Google in that case too. The company says it is now working to make it easier for consumers to use alternative methods for in-app purchases. As part of the settlement, it will also make it simpler for people to download apps directly from developers. Lawyers for the states said the agreement would bring meaningful relief for consumers.
From Google to Apple, which has taken an important measure to temporarily halt the sales of some of its watch models. That's right, Apple Watch models, amidst an ongoing patent dispute, highlighting the complexities of IP rights conflicts in the tech industry, even when it concerns a giant like Apple.
Apple has been forced to halt sales of some smartwatches in the US. The tech giant said Monday that the move affected its top-end Series 9 and Ultra 2 models. It comes amid a patent dispute over technology that allows the watches to measure blood oxygen levels. US watchdogs have said that violates rights belonging to medical technology firm Masimo. In October, the US International Trade Commission said it could bar Apple from importing the watches as a result. That decision is now under review by President Joe Biden. If he doesn't overturn it, the ban will go into effect on December 26th. Apple says it's taking steps to comply already, with the affected watches to go off sale before Christmas. Lower-priced models that don't feature the blood oxygen sensor aren't affected, and all versions will remain available outside the US. Massimo boss Joe Chiani has said he's open to a deal. In October, he told CNBC that he was ready to negotiate with Apple. The iPhone maker says Massimo's moves are just a maneuver to clear a space in the market for its own competing smartwatch.
Now, even as we head into a brand new year, questions are being asked about China's economic trajectory for the year gone by, that is 2023. While China says that it's recovered, many others have significant doubts, and the evaluation of China's financial stability and growth prospects continues to be a matter of debate and discussion.
Was this the year that China started to look more like Japan? 12 months of sputtering growth has some economists asking the question. After lockdowns ended, Chinese shoppers were supposed to go on a spending spree. Instead, they chose to save for a rainy day. Foreign investment was meant to resume, but cash actually flowed out. And the property market was supposed to stabilise, but instead sank deeper into crisis. Such factors led to an uneven post-health crisis economic recovery, even if the economy is on track to hit its growth target for the year of about 5%. Reuters Deputy Hong Kong Bureau Chief Marius Zaharia says that all raised some big questions.
Voices that compare China today with Japan in the 1990s have grown louder this year. The core of the problem, its economic model, which has done miracles for many decades since it was adopted in the 1980s. But according to some economists, it stopped working so well about a decade ago, when it began producing more debt than growth.
Japan has long since accepted it will never return to the roaring growth rates it once knew. With its population now shrinking and aging, some economists think that's China's fate too. Beijing officials are having none of it.
The fundamentals of China's long-term economic growth have not changed and will not change.
Policymakers have vowed to shift the economy away from its reliance on property. This year they pledged to boost consumption by households instead. But analysts say there is still no clear roadmap for change. Mounting tensions with the US don't help either, as President Xi Jinping acknowledged in November.
Whether China and the United States are ultimately rivals or partners is a fundamental and overarching question.
Any change could stoke resentment. Youth unemployment has already soared, and many Chinese have seen their wages cut. Falling property prices are making homeowners feel poor. And tackling the vast debts built up by real estate firms and local governments will mean asking who pays the bill. Households, firms, banks, someone else? It's not clear. Marius Zaharia again.
But reform is always difficult anywhere, but also in China, because it runs into considerations of social stability, and it runs into very tough decisions to be made as to which institutions or which sectors of the economy will bear the cost for these policies.
For now, government advisors are still talking about targeting 5% growth again next year. Looking across the sea to Japan, some economists think that might be hard to sustain.
We'll be taking a short breather here on World Business Report at this stage. We'll be back in just a jiffy. Don't go anywhere.
This is someone who is sitting inside our jails and is still very obviously and openly running, and possibly the largest organized criminal operation in the country.
स्टूडेंट ऑर्गेनाइजेशन ऑफ पंजाब यूनिवर्सिटी में सोपू का एक्टिंग प्रेसिडेंट टाइप भी रहा है. He was a troublemaker, getting into fights with people, not coming to the class.
As on date, it appears that Lawrence gang is the most important, the prominent gang. Gangs here in Punjab, they are intimidated.
Today he is India's most dangerous gangster, and India's presence are apparently no bar to how Bishnoi runs India's largest criminal empire.
News is now content. Just stream it. Download the world's first news OTT, News 9 Plus, ahead of the curve.
You are watching World Business Report, and the Bank of Japan reaffirmed its stance on maintaining steady interest rates, which is an ultra-loose policy it's been following for many years. Bear in mind, Japan's short-term interest rates are minus 0.1%, and Bank of Japan, holding that minus 0.1% steady, has redirected focus towards discussions on the timing and strategies for an eventual exit from this current ultra-liberal monetary policy.
The Bank of Japan still isn't ready to budge on rates. On Tuesday, policymakers made no change to the central bank's ultra-loose monetary policy. That left its short-term target rate just below zero. Governor Kazuo Ueda says he wants to see more evidence that sustained wage hikes are set to keep inflation at around the bank's 2% target.
The prospects are gradually heightening, but in terms of whether the threshold will be met, we would prefer to look at more data and various information.
The bank did not even change its dovish outlook for the future. That dashed the hopes of some traders that it would at least signal an intent to raise rates in the near future. Instead, the bank said it could still take additional easing steps if necessary, adding that uncertainty over the economy was still very high. More than 80% of economists polled by Reuters do expect the bank to raise rates next year, however. April is seen as the most likely timing, though some think an increase could come as soon as January. The yen fell following the BOJ decision on Tuesday.
From Japan, Hyundai, South Korean car maker Hyundai, has announced plans to exit Russia by selling its plant over there, and it is anticipating a financial impact or a loss of over $200 million because of that sale at a symbolic token price. More details on this Reuters report.
Hyundai will take a massive hit on selling its plant in Russia. The South Korean auto giant said Tuesday it plans to give up the facility in St. Petersburg for $77.67. Hyundai said it would take a near $219.2 million loss on the sale. Tuesday's move makes it the latest global automaker to sell Russian assets since Moscow invaded Ukraine almost 2 years ago. Operations were suspended at the plant in March last year. Hyundai said it was seeking to transfer its assets in the facility to Russia's Art Finance. It further stated the deal includes a buyback option and plans to complete the sale by December 28. Hyundai Motor is following the path of some other major car makers. Many sold their assets in Russia for a nominal fee and included buyback options that could one day allow them to return. In May, Germany's Volkswagen sold its shares in its Russian assets to Art Finance, which is supported by the auto dealer group Avalon.
Right, many car makers and others exiting Russia, at least temporarily. We'll have to wait and watch whether they come back to Russia once the war is over. But from one war to the other, the Israel-Hamas war. Guess who is the latest celebrity to show solidarity with the hostages from Israel who were taken hostage by Hamas? Comedian Seinfeld. He has expressed solidarity with the families affected by hostage situations because of the Hamas terror attacks. And he is said to be currently in Israel, meeting with all the affected families and providing support and solidarity in trying times like this. And more importantly, shedding light on the humanitarian concerns amidst geopolitical conflicts. Away from that, but keeping it with the world of entertainment, Gen V, a superhero series, is all set to be about distinguishing itself from others by prioritizing human-centric narratives. And that's according to its cast, and fostering discussions on storytelling and how it's changing in entertainment.
Not only is it a superhero show, we're telling a story of humans. And I think that's the most compelling thing, is that people can see themselves in these characters.
I know there must be many thoughts going through your mind right now. Is this the right place for me? Do I belong here?
I think that's what makes The Boys and Gen V so unique, is it's completely the opposite and kind of at some points makes fun of the superhero world and norm that we've been so accustomed to the last few years, and especially this year.
I think our show does a really great job of being in a lot of different lanes. Like, I hope people thought it was funny. I hope people related to the characters. I hope people are excited about the romance. I hope, people are excited about the action and the evolution of our characters. And yeah, mostly I hope people enjoyed it, and I hope they're excited for season 2.
It's lights out. There are evil people at this school.
This is way bigger than us.
Right, the only question is, will Gen Z take to Gen V? But moving on, prominent celebrities are sharing heartwarming anecdotes and cherished traditions centered around their favorite holiday foods, adding a personal touch to this festive season. Take a look at this.
Well, I feel like Christmas dinner always has a, now I've forgotten the word of it. The little sausages wrapped in bacon. What are they called?
I love a bit of stuffing. I'll leave you with that.
I look forward to my mother's dumplings. My mom's dumplings are the best in the world.
That's tough, because I don't associate food with Christmas necessarily. Every day is Christmas Day. Every day is food day.
Oxtail.
Oh my gosh, like every stew, I love like a good tagine. I love something that just like sits in the oven and roasts for hours. That's my jam.
Oh, my favorite dish is that sweet potato casserole with the marshmallows on top.
I love the marshmallows melted on top of the yams. That's so good.
You want me to pick between candied yams and macaroni and cheese? That's what you're asking me to do.
Some kind of pudding of some kind. Maybe not Christmas pudding, but some kind of pudding.
Maybe rice. Yeah, rice in anything. I love rice.
Well, away from that, Californians are ditching beaches for freezing ice baths in search of romance and a quirky twist on dating. Santa Monica locals in California braved icy waters for a unique speed dating experience, leaving the beach scene behind. Take a look.
5, 4, 3, 2, 1. Let's go. The first 30 seconds are all about acclimating, so slow the breath down. Trust yourself. You've got this.
Okay. Oh, wow. All right. Ooh, the hands. Okay.
And then their legs will go over the top, or you guys can go side by side, whatever feels best. But the goal is to fully submerge. Party begin, my friends.
All right. All right, go for it.
So as you enter the tub, take a few moments, pair each other's breath, slow it down, one breath at a time. This becomes. Here you go, brother. The final minute, my friends. If you haven't already, sink in. You got this. Pair each other's breath. Slow it down, one breath at a time.
Talk about breaking the ice inside chilly waters. That's all we have time for in this edition of World Business Report. Thank you so much for watching. This is Krishna Kumar signing off.